Hello everybody, welcome to the long-awaited TPD Part 3. Now as always, I'm going to keep it short, keep it sweet. I'm not here to waste your guys' time, so we will dive right into this one. Trend reversal. For a true trend reversal, it's optimal to find two consequent SMTs that form under a higher time frame cycle and lower time frame cycle, creating a two-stage SMT. If you're bearish, you want to see these SMTs form at the high of the range, and if you're bullish, you want to see these SMTs form at the low of the range. Sequential cycle SMT. Sequential cycle SMT is when the higher time frame SMT and lower time frame SMT are consecutive. Now, what do I mean by that? As you can see, we have a higher time frame cycle. We have 2 quarters from a higher time frame cycle. We form a low, and then we form the SMT on that higher time frame cycle, and then on the consecutive cycle, we form another SMT. So we have a higher time frame and a lower time frame cycle happening right after each other, making it consecutive. An example of this would be the weekly cycle and daily cycle SMT. Now this is more common, and you will see this more often for trend reversals. The sequential sequence, as you guys already know, this was explained in the previous TPD. If you have a weekly SMT with a 4-hour TPD, then you would look for a daily SMT, and specifically the 2 a.m. 4-hour candle. That is the sweet spot for confirming a weekly SMT with a daily SMT. And for monthly SMTs, you want to see a daily TPD and then a weekly SMT. All right, SMT skip. SMT skip is the utilization of a higher time frame and lower time frame two-stage SMT, but without the need for a higher time frame and lower time frame SMT to be sequential in regards to the cycles. The SMT skip sequence. So if you have a monthly SMT and then a 4-hour TPD with a change in the state of delivery and displacement, then that second stage cycle, the next day, you would look for a daily cycle SMT. And CSD is just the abbreviation for change in the state of delivery. And if you have a weekly cycle SMT, to confirm that, you would look for an hourly TPD with a CSD, or change in the state of delivery, and displacement. And for your second stage SMT, you want to see that next daily quarter open up, and then you want to see a 90-minute cycle SMT. So a little example of that would be we have a higher time frame SMT, and then we would form a TPD, and then on candle 3, we would change in the state of delivery, and then that next day or next quarter open, you would look for a lower time frame SMT. All right, so here we are looking at the charts. As you can see, we have an asset on the left and an asset on the right. And if you want to backtest this once I get done explaining it, this is the Euro USD and GBP USD 4-hour time frame on the first and second week of June in 2024. So as you can see, we have a monthly SMT, and then we have a 4-hour TPD form, confirming that monthly SMT. Now if we zoom in a little bit closer into there, you can see we have the TPD form right here, and then we have that change in the state of delivery. Now what do I mean by change in the state of delivery? As you can see, we have candle number 3 right here, candle number 2 right here. You can see candle number 3's close is lower than candle number 2's opening price. So if you have a bearish TPD and candle number 3 strongly closes below candle number 2's open, for the asset that is up close, then that is a valid CSD. And it would be vice versa for if it were a bullish CSD. If it were bullish, then candle 2 would be down close, candle 3 would be up close, overriding candle number 2's opening price. And it is important that there is displacement there. As you can see, there was a very strong push down, closing very, very low below that opening price. If it were to close right at it, then you would be a little bit more cautious. So for SMT skip, you want it to be a strong displacement before giving the thought that there might be an SMT skip there. And as you can see, we have the new day open outlined right there. And now going into the lower time frame chart, you can see we had an SMT on the daily cycle, creating an SMT skip that allowed for downside movement without needing an SMT on the weekly cycle to confirm the monthly cycle SMT. Now here's a little diagram you can screenshot because it is a little bit difficult to remember at first. So if you need something to look back on, you have this, and don't worry, WAP will not get you if you screenshot it. I'll allow it to where you are able to screenshot it. All right, quartered TPD. When to use the 6-hour TPD. A 6-hour TPD commonly plots important weekly pivot points and turning points. A 6-hour TPD can be another way to confirm monthly and weekly SMT together. A 6-hour TPD can indicate a daily SMT, and a 6 a.m. TPD can be useful in gauging the PM session. All right, so here we are looking at the 6-hour time frame, and again, if you want to backtest this once I get done explaining it, this was NASDAQ and the S&P on Wednesday, October 30th, 2024. So as you can see, we form a monthly SMT, and then we have that 6-hour TPD form as well. So zooming in a little bit closer, you can see we have that clear divergence between candle 1 and candle 2 being the predefined SMT, and then expansion on candle number 3. And looking at it from a lower time frame, there is the SMT. Advanced premium and discount sequence. Now, if you want to stay in tune with any of the higher time frame cycles, even if you consider the daily cycle a higher time frame cycle and you would like to scalp, then this is exactly how you would do it. So, starting out with the monthly cycle, if you want to stay in tune with the monthly cycle, then you would look at the weekly candle range. That would be your higher time frame, and then you would look at the 1-hour time frame and use that as your lower time frame. So that entire weekly candle range, you would mark out the high and the low, and you would utilize that as premium and discount. Same goes for the weekly cycle. If you want to stay in tune with the weekly cycle, then a daily candle range would be your higher time frame premium and discount, and then you would use the 15-minute time frame as your lower time frame to navigate the weekly cycle. And the daily cycle, same thing, except you would use a 6-hour candle range as your higher time frame and a 5-minute time frame as your lower time frame. And quarters are candles, candles are ranges. So that is something for you to investigate. So looking at a little example, we can see we have a candle. We mark out the high, we mark out the low. That gives us a premium and discount. So on that next candle, if we wanted to stay in tune and play off of the continuation, we would look for price to return back into premium and look for another reason to be bearish. And as you can see, looking at the lower time frame, we retrace back into premium, form an SMT, and then continue lower. And if you want to go look at this yourself, this was between the NASDAQ and the Dow. And those that have been following me and watched the Tuesday, December 31st lecture, then you guys will know that was already there. But if you haven't watched that and you're watching this right now, then you can go investigate that yourself, and you will see the SMT was there in premium, confirming the reversal and confirming continuation of the higher time frame. And as you can see, we have that SMT, and that leads us to the low of the candle. All right, homework. So your homework is to find an example of SMT skip, find a 6-hour quartered TPD that served importance to the weekly range, and it could be any week, and find an example of premium and discount with the advanced sequence. So hopefully you found this one insightful. I will speak with you all again soon. Good luck and good trading.